This week is absolutely massive in the financial markets, and let's do a little bit of a calendar exercise. Chandler, help us out with this on the edit. So this week, Monday's pretty quiet, but Tuesday we've got Amazon earnings after the bell, which will be huge for the stock market. Wednesday we hear from the Fed, which of course FOMC always has so much impact on the financial markets, whether you're talking about currencies, commodities like gold and oil, or if you're talking about indices and stocks. Wednesday will be a really probably biggest day of the week. But that's not where it ends. On Thursday, we hear from Apple, which Apple earnings are very, very important to the overall market, as Apple is a huge component of the S&P 500. And finally, on Friday, just a light one, we've got NFP, so we get an idea of the jobs market as well. So every week seems to be super big in the markets, but this one especially is really important because you're combining key economic data, the central bank of the United States, the Fed, and earnings from some of the big companies that kind of make or break the entire market. So it's a big one. Let's jump in. Welcome back to the channel, guys, and as we get started here, do me a quick favor, hit the thumbs up button on the video if you like my content. If it's helpful to you in any way, shape, or form, it's all I ask. Hit that thumbs up button and let's get into this. So first of all, I wanted to start out by taking a quick look at the S&P 500, which continues its win streak here after its losing streak. So we had this big sell-off and we put in this higher low. I talked about this on my Sunday video. We are now nearing a really key level of resistance though. Despite the support here, breakout of resistance here, which all of this price action looks pretty bullish, it's now kind of make it or break it hour for the S&P 500. Because what I'm noticing here is if you take a look left, where this level was key support, and then we broke to the downside and this became resistance, we are now retesting that area of potential resistance on the SPX 500. And at the same time, we're approaching a similar level on the NAS 100 or the NASDAQ. So the NASDAQ had this key area of support where, again, it continued to bounce each time, and then we broke out and fell from there. Well, we're retesting that area, and at the time of recording this, there's a little bit of a wick forming already. Let's see how this price action reacts. Now, let me add some context here. The buyers have been really impressive, really strong even, and buying each dip that presents itself in the last several days. Part of this, you could argue, is because earnings have been coming out pretty impressive. We've seen Microsoft and Google really surprise and excite the market. And so tech earnings, because these things are market cap weighted when talking about the S&P 500, the NASDAQ, big companies that have great earnings can really carry the rest of the index on its back. But as we hit resistance, we have to respect it for what it is. Is this going to cause some struggle, and are we going to potentially start breaking back down, or are we going to break out and continue the recovery? Now, you might say, well, Nick, you could just cover your bases and say it could go either way. And that's kind of what I'm going to do, because again, with all of this economic data, as well as earnings and the Fed, I don't know exactly what the market's going to do. However, here's my general bias. With this price action, it's been impressive. The NASDAQ, the S&P look like they want to recover. They look like they want to continue going higher based on a price actions perspective. But where I'm really going to keep things in check is that Fed meeting on Wednesday. If they come out more hawkish, it would not surprise me if the market does see a bit of a corrective move back down to retest the lows. If that happens, I'll be a buyer. I'll be looking for opportunities to start adding more positions to some of my longer term options trading on the indices. And in the shorter term, I'll be looking for, just to stay cash heavy on that retracement if it happens. So I am bullish overall, but short term, I do see some headwinds for the market this week that I think could take it lower. If I'm wrong, I'm wrong. And if we break through these levels and just start finding support there, I will probably just be a buyer looking for opportunities alongside the rest of the market. But that's my game plan for the indices going into this week. The overall trend for the S&P is giving this a bullish reading on the Edge Finder currently. I'll be very curious to see if this score does last for a little bit. I'm going to be watching it close. If it does dip, I am looking now for S&P potential entries. Should be interesting to see if we can get that. On top of that, I do have a silver position position long as well. When I look at the top setups, I'm liking that we're getting a lot of confirming factors when looking at the economic, technical, and sentiment signals produced by the Edge Finder. We're getting a total summarized score of +7 on silver, and that is equating to a bullish bias from the Edge Finder's scoring system. So if I go quickly and take a look at the silver market, I'm still flat on my position. It hasn't really moved anywhere. If I pull up SLV, this is the ETF that I've traded silver on, I'm just about flat on this position. If the market does continue to push higher for metals this week, that goes for gold and silver, this would be great for my position, but I will stop out if we break through the 61.8% retracement on my silver position. Speaking on gold for a second, we're still in an overall upward trend. I've mentioned on my live streams that I think that there is a bit of an appetite for gold despite rising yields, which traditionally are bearish for gold. I think that, even though this is happening and that's telling you, inflation and strong economic data may be sticky, which is not necessarily a great environment for gold, right? High inflation plus strong economies, not great for gold, because that means the Fed can hike rates, it means they can keep them higher for longer, and rates do, of course, cause gold is very sensitive to interest rates and where they're going. So I'm not necessarily outright bullish or bearish on gold, but the price action looks good. Arguably, one of the reasons that this has propelled higher overall is because people, not just US people, but globally, seem to be wanting to get out of the dollar. They're a little concerned about the rising debt situation, the geopolitical tensions that are rising in this world right now. Unfortunately, all of that is causing a bit of a demand for gold despite what's happening in terms of US Treasury yields. Oil continues to trend up overall. It did find a bit of a support level around this 81 level. It's giving back some of those gains here this morning. I remain cautiously bullish on oil. I don't overall have a technical or a entry signal just yet from the Edge Finder. US oil is still a neutral reading, but I'll be keeping an eye on it. If it does tick into the bullish camp, I may be looking for an opportunity to get long there. And let's have a look at the latest commitment of traders data to see what this shows us in terms of what institutional money is up to. Week over week, we get this data. It imports into the Edge Finder and generates these different tables. First one we'll talk about is more for longer term position trading. If we're looking at the net positioning, what we can see is gold, oil, silver, the Nikkei, copper, US 30. These are proportionally institutional money is very long rather than short. On the flip side, the Swiss franc, the yen, the Australian dollar, the CAD, the Kiwi dollar, and the bond, 10-year bonds, these are more bearish proportionally weighted in terms of institutional money. Now, why is this longer term rather than shorter term? Well, if you watch my videos, you know that these charts change very, very infrequently and very slowly. These signals have been relatively the same for months now, and they don't change very often. Again, that is because the overall weighting of institutional money flows very slowly. Now, what's more interesting is this second column down here, the second table down here, which is the latest weekly COT filing. And this shows us where money moved in or out of in terms of individual securities or symbols here. So check this out. If we take a look at the net change percentage column, this is a very useful column. This shows us where basically money flowed in or out when looking at the change in long and short contracts and the overall long and short positioning of the Commitment of Traders report. On the week, the Nikkei, copper, silver, the South African rand, the Australian dollar, the CAD, the Russell, the 10-year bond, the Bitcoin, and SPX gold. These things all saw varying levels in descending order of institutional buying. Now let's flip it around and take a look at ascending things that are getting the most selling on a proportional basis. So let's take a look. The Kiwi dollar saw some selling. We saw oil, the NASDAQ, the yen, the euro, platinum, Swiss franc, the Dow Jones, and the pound. So take that for what it is. Again, we saw big selling specifically on these things. We saw big buying specifically on these top things. Remember also, if you have not already picked up a copy of the Edge Finder, that is the product that I'm using here on the screen right now. That sale is ending. This is our biggest sale of the entire year. It comes to a close in just about 48 hours. So if you have not picked up a copy of the tool, here's how you can get a copy right now. Down below under this video in the description of it, you can see that there is a link directly to our chat with us line. So this link, this talk to link, allows you to chat directly with someone on my staff, a real person who can answer some questions about the tool if you're interested in it, and they can get you up to 45% off when you use that link. Again, this is specific. This specific link will get you that extra discount. That is the biggest discount that we will do all year long, and it's ending very, very soon. So take advantage, click the link. So the dollar index this week could be very volatile as well. With this big shoot up recently, we've seen a bit of a consolidation period or sideways movement. The question will be, is this just consolidation before a bigger explosion higher? And what could get that to happen? Well, if the dollar's going to go higher, the biggest event is probably going to be Wednesday's FOMC event. This is where we're going to hear from Jerome Powell. We're going to hear from the Fed. How are they reacting to all of this data? Do they still want to cut rates this year, or are they going to hold off? Are they going to pause? Is there going to be some hawkishness, or basically the willingness to keep interest rates more restrictive for a longer period of time in order to get the economy to slow down a little bit more and normalize that inflation figure? That's kind of the camp that I'm in. It's why I'm in the, why I'm very bullish on the dollar overall. I currently have a position that I'll talk about in just a second. But again, if we get some hawkishness out of the Federal Reserve, we may start to see a bit of a breakout here, some kind of continuation patterns on the dollar index. And if we get some short-term bearishness in the dollar, whether that be from the FOMC event or the jobs data on Friday, if something comes in light or dovish from the Fed on Wednesday, I think it could be a buying opportunity relative to its peers. The dollar, in my opinion, still looks strong. And that opinion is also based on the stats, the facts that we have in terms of economic data. If I filter this table here just for major currency pairs, you can see that most things on the Edge Finder get a preference towards the US dollar. So bearishness on the euro against the dollar, bearishness on the pound against the dollar, bearishness on the Kiwi against the dollar, etc. So I'll be watching this week to see if that dollar strength and dominance can continue. And here's a bit of an update on some of my options trading, or some of my more mean reversion based trading. I sold puts on the semiconductor ETF SMH. This is going really well. It poked into a bit of an oversold status area for me on this. I've been using the Keltner channels and I really like them. They're just a very simple tool to help visually represent where, volatility has expanded, markets have reached extremes, and when you're selling options, expansion and volatility can equate to some very rich premiums that you can collect. So in this case, I'm up $825 on this position. I sold puts on, which is going well so far, just playing the bounce back here on SMH. Some of you guys might remember that I sold puts on XLY, collected the full premium on that as the market has rebounded and jumped actually today. So I didn't have to buy the shares and I collected a nice premium on that one as well. And XLK, I sold puts on this one and ended up getting assigned. So I got assigned the shares and now I'm holding on to the position. If the market does shoot up higher and we start reaching overbought territory, what I will do with my position is I will sell a call against it. So what that would mean is that I have 1,000 shares. I can sell 10 contracts if I want to, basically selling 10 call contracts to the upside. So if the market starts to become, a bit overextended to the upside, the premium on those calls would look pretty good, and I could maybe look to do that. So currently just sitting and holding on to my position on XLK. I am in the green already on this. This is the technology ETF, by the way, and I'm sitting nicely in profit on this one. If that one does continue, I'll sell calls, and if it goes sideways or down, I'll just hold on to it as a part of the portfolio, and I'm willing to kind of just have it in there as I do like the technology sector overall. My covered call position on the S&P 500, or VOO is the ETF, is looking really good. I'm up about $3,800. I've sold calls against my position, and so I will collect some premium on that. If the market does continue to rip higher on the S&P 500, I may get called away from my shares, which would be fine. I'd be taking a profit and collecting a nice premium on the calls that I sold as well. So very nice there. My losing position is TLT. I'm down nearly $3,000 on this, helped or cushioned just slightly by the calls that I sold against my position to collect some premium while I wait. Not bad at all. Yes, this could be going better, but with yields rising, the bond market, TLT especially, a bond ETF, has struggled recently. So if this continues lower, I'll just continue to hold on to it, potentially sell covered calls against my position. And if it goes higher, maybe I'll get called away at some point in the future. By the way, if you're looking for a brokerage to either trade options or stocks, or whether you're looking to trade Forex in the US, if you're looking for CFDs outside of the US, we've got several brokers that are linked down below in the description. If you choose to use these links, these are referral links and you'll be helping out my channel. But in your own favor, if you're on the hustle game like I am, check this out. Each one of those brokers linked down below, they have special perks for people who sign up using them as my subscribers. We've got everything from free shares that you can potentially get, welcome bonuses that are up for grabs, and so much more. So check them out. Again, it's free money. Why not check it out? Thanks guys for watching today's video. If you do have questions, please feel free to comment them down below and let me know what you'd like me to look at in the next video. Thanks for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.